below at 71, 62, 55, 45, and 38. Resistance on the upside at 84, 90, 97, 4203, and 09. Pivot 78. Resistance at 84, 90, 97, 42, and 09. Support below at 71, 62, 55, 45, and 38. All right. I would kind of just sold off here when Europe opened up, and maybe they're a little bit nervous about everything that's going on there. As we quickly flip down here to our 71 area, if you have to have the order in there, I keep telling you, you have to have the order in there. Went down to 71 and a half. Nice quick rotation here. Okay, there we go. Charts are back up. Sorry. All right, nice quick rotation there off of our 71 and a half. And like I said, you got to have your order in. Take advantage of these quick moves. You can see how quickly it's moving. So we probably need to extend our stops here a little bit. But you're getting the rotations that we're looking for here. Nice rotation off of 71 again if you did dip your toe. And you're getting a good 4-point rotation here. So definitely about 4 or 5 points, I think, in the stops and our profit targets. And because it's jumping around very quickly, we've got to maintain, keep focused, stay focused, and, have your orders in place because the market seems to be kind of moving around a little bit quickly here this morning, which is fine. Get volatility back in the market. I keep saying that we don't have control over volatility and we can't create volatility, but once we get it, we have to take advantage of it. And patience is important, as you can see here over the last, so finally we got some opportunity. So hopefully you were able to take advantage of the 71 area and went and gave me another dip at it after I said what I said. So maybe just put the order in afterwards, and hopefully you were able to take advantage of that quick rotation. I got a nice rotation off of it very, very nicely, and a good 5 points on it very easily. You gotta love those trades, that's for sure. All right. So the 71 held resistance right now. We got around the 84. You can see our blue bands coming in there at 87. And remember, we're kind of moving fast here, so definitely stay focused and make sure you keep your stops in place. That's for sure. The amazing thing about this rotation here to the downside is the bond market is at a 160 handle. Definitely, I don't want to say it sounds weird, but I don't know. Something is going off kilter here. I think market is supposed to go down when interest rates, as we come up here to the 84 area now. Again, you can space them out accordingly here. You would think that the market would go down because interest rates would be going up, but interest rates are actually going down. So the weird dynamics going on here. And so this is what happens when we finally get to volatility. Not only do you get your first level triggered on the first rotation down, it comes all the way back up. You almost have your second level triggered depending on how you're scaling in up here at the 84 area. So we wait all day sometimes and we get nothing. And now in the first 3, 4, or 5 minutes of the game, and we are in place trading. So this is the beauty and the beast of this game, right? I mean, the beauty is that we can get really busy really quick sometimes, and you got to be ready for it. Other times we can be just twiddling our thumbs and watching paint dry, or waiting for a cow to poop, as my friend Don would say, something to that extent. That I guess I didn't know that was a thing, but I guess it is. But yeah, so those are we go from that to this. Stay focused. Don't get flustered. Keep your stops in. Keep trading. Watch the levels. Watch the price action opportunities. And like I said before, when things were slow and we were commenting on wanting to learn how to trade, probably good when it's slow to learn to trade versus the volatility. It's kind of the opportunities are quicker, and you need to have the concepts in place so that when you get these quicker markets, you are ready for them. Right. That's the opportunity here, to be prepared to trade when the opportunity is given to you, versus obviously not so much not trade, but being patient and waiting when the opportunities are out there. But for any of those of you who are thinking of the education part of it, good time to learn when things are slow, because when things pick up, you want to be prepared, be ready to attack the market and trade. Be ready for these kind of opportunities quick. All right, so we drifted quickly down to our first support level, gave you a chance to buy it even on the second rotation, and then quickly almost got filled on the top side. Almost got filled at 83, again 84, depending on how you're scaling in. I did not, though. I was a little bit higher on my entry point. Maybe some of you got in when it got up to, I don't think it got up to 83. So, but who knows? I don't know how you guys scale. Everybody scales a little differently, right? So keep that in mind. All right. All right. So welcome to some of the new folks that are in here. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels that we given out, and the price action opportunities that occur once the market paints some bars. Combination of both gives us opportunities or setups or trades that we can try to make. We're looking, depending on volatility, about 4 to 5 trades on average in the course of the day, on average. Sometimes it's a lot less, sometimes it's a lot more. Again, depends on volatility. We do not create volatility, we just trade it. So that's where we're at, and we're looking for about 2 to 3 points usually on our stops right now, because of the infused volatility in the market. Probably about 4 to 5, 3 to 4, depending on what risk tolerance you're at. So, and we're getting the same profit targets as well. So it's not like it's a big stop. The stop is there to keep us in to take care of the extra slippage that might come with this with the increased volatility, and that's the only reason we would have that those extended stops, because there's slippage that occurs when there's. You can see here there's hardly 100 lots up and down the order book, right? So that's compared to 200-300 lots. Usually, and so the volatility is there. You're going to get some movements, right? Somebody wants to sell a 500 lot, it's going to cost him 3 or 4 or 5 points ticks, versus trading it when it's slower. So again, that's what we're doing here on an everyday basis, and it's trading, which is very exciting in its own way. Again, we do have our education course that helps you if you are new to this game. And if you're not new to the game, hopefully we can add some insight into your, or add some different different concepts and ideas to help you make money. All right, we are hanging around our pivot here. So we've zoomed up, tested our low, came back very nicely, almost got triggered on the upside resistance, and now we are kind of hanging around our pivot here. So very nice quick rotations around our levels. After all, that's all we hope that happens. And that's where we're at. So Anybody have any questions? Feel free to put them in the chat box area. If you came late, you need a repeat of the levels, let me know, and we'll try to get them up in the chat box area. All right. We're slowly trickling down here. Next support level we have is down at 62. Let me see what news we can talk about here. All right, we're just kind of drifting back here to our pivot, so kind of going nowhere fast here. I mean, it's going fast, just maybe nowhere. All right, that's what we're doing here. Let's be patient. Let's see see if there's any other numbers that are coming out this morning, first of all. And that is a no other numbers. The bond yield is down to less than 1.5%. Very, interesting combination there that is below 1.5%. As we again come back up here to our 83 area, if you're going to take it, keep your stops in place. If you are, it's a little bit too risky because we almost came up here last time, then trade it accordingly. '84 area, sorry. All right. So we're coming up here again, just inching close to it. Again, if you're canceling it because of their last rotation up, I get it. If you're going to keep it, that's fine too. Just make sure whatever you do, keep your stops in place. All right, Don. Don just said he likes days like today. I am done. Have a great weekend. It's 8:43. What? How did this happen? I don't want to know how it happened. I'm jealous. Wait, I got an idea. Should I ask him to stay here all afternoon? Chip in for me? No, I wouldn't do that to him. Well, maybe he got those 71s and rode them all the way up. Nice trade there, Don. See, he does listen to me. All right, now we're coming up here. Going to test this 84 area. Okay. Well, if you got in there at 83.5, you're getting paid off here very nicely. Nice rotation there against the 83. Even if you got in at 83, you got paid off very nicely there. And hopefully one of those got you in to get up to 83.5. So I don't know if I was in there at 83 and 84, so I didn't get 84 obviously, but maybe you all got in there at 83.5. Nice rotation. All right, obviously levels are being worked on here. All right, nice rotation there. Well, we should have got the 18 after that time. For sure. Of course, I had 84. All right. Nice rotation there off of our level. Nice rotation on the downside off of our level. And again, we talk about extending your stops. So we're getting rotations to defend or understand that we have to extend those stops here a little bit. So if you are doing that, hopefully you are doing well with it. It's good to have this kind of day on a Friday, right? Pretty amazing. Didn't expect this morning, I'll tell you that much. Thought after yesterday, the market kind of absorbed everything it was going to with that. Oh, quadruple, which I always love that. It's always like, oh, that's going to be a big day. Please forgive it. I'm not into the. I mean, for those people who are involved in it and have to actually, switch, change months and all that stuff that they have to do with the witching when the options expire. I get it, but the fact that it always has to affect the market. That's the part that I don't get. I mean, it moves around a little bit, but that's not the reason we're moving around today. Okay. There's obviously something going on that broke really fast before we opened up. So, hey, whatever reason, I really don't care as long as we get busy and move around. But I always, there's always, oh, it's quadruple witching day. Okay. It's like, okay, like I'll just wait for that one day to trade two or three times a year. Obviously, there's some dynamics or some fundamental news that's affecting the market here, and it's creating this volatility. Because it's just, it is what it is. Yeah, I'm sure it was a Fed guy who spoke. Let's say I'm sure somebody said something about the market. So I just can't figure it out. But yeah, somebody said that, saying that Bullard said something. The Fed governor, which I can understand. It's with the market because these guys, once they have their meeting, then they go out and chit chat with the public, and when they chit chat with the public, they can say whatever they want to say. And some of them, you got to remember, not all of them are on the same train. They don't always agree on policy. So that's where they're at. So when they start talking, they can start talking. Let's see, some particular market activity has been taking place since last Fed meeting. Really, with investors unwinding some of the year's dominant reflation trades and tech-heavy NASDAQ 100 rising to a record high. Commodities are also tumbling, with oil on decline, gold tumbling to below 18,000 an ounce, 1800 an ounce. Soybean futures have meanwhile wiped out their gains for 2021, while the rally in corn, lumber, platinum, nickels are losing steam. Many are pointing to the Federal Reserve as recognizing it as it may have to raise rates earlier than expected to deal with the possibility of inflationary threat. While the current dot plot signals hikes that are 2 years away, the sentiment may be helping undercut the inflation reflation trade, and that has dominated since January. Overnight, the Dow and S&P futures hugged the flat line, while the contract tied to NASDAQ rose 0.2% again. So you can see this was written just before the market kind of tanked a little bit here. As we continue down to the lows here, the next support level we have is down at the 62 area. Again, just stay focused, trade levels, find some, if you find some good, we did have a nice resistance up there right against our 84 area. We did not, we didn't get to 84, but we got up to 83 and 75 there. So hopefully you were able to scale in there against it. And we're able to take advantage of this quick, nice rotation here off of that level. Hopefully one of these trades here, and our first rotation, the first support level early on this morning also worked very nicely. Bonds, though, pushing their highs. It's amazing. Totally amazing. Warrant higher rates supposed to dent growth in tech, and why are they way up? Investors could be honing in on the pace at which the rates are expected to rise, which the central bank signal would be slow even after 2023. The fact that Powell did not discuss tapering, even taking it out of the vocabulary, would signal expansionary policy is here to stay for the next while. That in addition to transitory inflation outlook, which is starting to take root among the investing community. So this is what they say. So they don't say anything about, they're just trying to make reasons for the market to go up, right? So they're doing. They're all guessing. Nobody really knows, but they're guessing. They're doing, they're doing their job. They're guessing. But this is great. This is what I'm talking about. That's why you don't trade FOMC or any of those. Oh, he didn't say this. Well, initially he didn't say this. Now they're saying, well, why didn't he say this? Well, he didn't say that because he didn't say that. And he didn't say this because he didn't say this. And that means that. So you put all those like that and this is together, and this is what you get. Guys guessing what the Fed is going to do. But hey, whatever. All right. So the market is kind of slowly trickling down here again. Somebody suggested that maybe Bullard said something, and one of the Fed governors said something that's creating a little injection of volatility into the market. Hey, but whatever, we'll take it. Next support level we have is down at 62. Over the last two sessions, the spread between the 5s and the 30s yield continued to widen and is now below where it started this year. And that news helped drive cyclical shares to the backseat, with money flowing into defensive names like healthcare and consumer staples. Tightening from the Fed could also temper GDP growth, a concern expressed by Goldman Sachs. Investors may be interpreting the Fed's hawkish tilt Wednesday as a sign that an extended U.S. post-pandemic economic expansion may be a bit harder to achieve in potentially emerging environments of less accommodative monetary policy. All right, we're just kind of got down to 68 area here. We're looking at 62, next support level. Coming back up here to our pivot. So in case you are looking for that. All right, coming all the way back up here. Market is kind of bouncing around for us, giving us a chance up and down. Again, not that we were looking for anything down to where we were, but we were looking actually for 62. Came all the way back up here and kind of bouncing back off here a little bit. That's very, very jumpy little market here. Jumpy, the right word? I don't know. Just be patient or wait for the opportunities. You don't have to jump in for just because you see the market's moving around, right? Just wait for a price action opportunity or something to get triggered a trade for you to make money on. All right. That's what we're trying to do here. Patience is important. You're going to get plenty of opportunity. You don't have to be chasing it. Look, we already got a few opportunities this morning, and it's only 9 o'clock. So, I mean, we've traded more today than we did like almost the first half hour of the whole week, this whole week combined. Can we repeat the levels in the chat box for some of us who are rolling out of bed a little later this morning? There we go. All right. Yeah, they've got a nice little double top up there. Maybe you traded against it. Possibility there is nice little trade if you did get in. Again, there's different ways of looking at markets and different ways of using the price action, and everybody's got different opportunities that they can take. Not everything's the same, and you got to keep your stops in place if you're going to take the price action opportunities, because they do, they're out there. You just have to trade them. And if you're trading them, you got to keep your stops in because you're going to get ample chances. Obviously, many opportunities there to trade price action opportunities because of the movement. Again, if anybody wants to learn some of these opportunities and extend their trading knowledge a little bit, feel free to ask us, as we do have an education course that takes that into consideration, and we can show you some of these trades in addition to our price levels that we give out. So combination of both helps us find trades. So we try to do here on an everyday basis. By the way, if you use the 74 from yesterday, it worked very nicely this morning, right? Was saying, somebody asked me yesterday about using levels overnight. That was the one. Far away levels, I said. All right. So hopefully, maybe if some of you were looking. Anyway, 74 is just a beautiful thing around here. We just love 74 here. We should rename the room 74. Not that there has been a name to this room to begin with. Just saying. I don't think we have a name to this room. $74. That's what this name should be. That'd be kind of cool. Everybody else saying, "Are you kidding me?" Yeah. Mark and Don's room. Perfect. Only the guy from California could suggest that. But hey, okay. I'll think about that one. All right, back here down to the lows really fast. And let's see what wants to do. Very, very whippy, choppy, energetic, to say the least. There are opportunities, though. have to just be prepared for them. All right. Inch the new low there. Pop back up. Next level we have is 62. All right, rotating all the way from that new low, coming back up there. So nice little, well, let's see. Yep. All right. Kind of a crazy kind of day. Good so far. Not complaining. I'm loving it. Right now, we don't have a position. Did you get our levels from this morning? Tulio. Okay, if you can we repeat the levels again in the chat box area? Those are the levels we use as a guide for the day. We had our rotation there off of our first support level that worked very nicely. We bought the 71. You got a nice pop back up, and then we sold the 84 level above a little while ago. And if you just use those price action opportunities, you did okay with our trades. We got today, because of the increased volatility, we're looking to get 3 to 4 points on our trades here, and we're getting them very easily. So that's what we're trying to do here on an everyday basis. We're scalping the market, trying to find these inflection points. The levels are one opportunity in addition to price action opportunities that occur. We are trading mini S&Ps here and scalping the market, basically. That's what we're doing. And so again, we use our levels as a guide, and we can adjust those according to price activity. We can subtract from them, add to them, tweak them a little bit based on price action, and all of those come into play as the market moves around. You can see here our 84 level worked earlier. So right now, a rotation back to the 84 would not be any sort of trade. Probably be looking at the upside there at the 90 area. Almost to say that there's a little bit of a buy there above the 86 area to go us up to 90. If we get back up there, I don't know. But we kind of just sit back and wait for the opportunities to present themselves. We don't try to chase the market. That's not what we do here. We're kind of waiting for picking our spots is what terminology that is I like to use. You pick your spots, you find your trades, you have good reasons to put on your trades, and anything I say, whether they be the levels that we give out or the price action opportunities that we have, is a thought experience. We have an education course that allows you that we teach the concepts and ideas for you, and that's what we do here on an everyday basis. We used to do this on the Florida Exchange, but unfortunately, they closed the Florida Exchange down a little bit. At bay. Well, not at bay, but in our basement. So again, that's what we are doing here, trading futures. All right, we're just jumping around here. It kind of held the 66 area down there, bouncing back up. Coming back up here to our pivot. Your pivot player, you're getting paid off here today with that trade very nicely a couple times. You know, so nice trade if you're taking it. Hi there, Barry. If you have any questions or if you need anything you want to say, just put it in the chat box area. You bring out the chat box area, you'll be able to ask any questions that you want. So, nobody has to raise their hand here. Just put any comments that you have or questions that you might want to ask in the chat box area, and we will answer them for you. Welcome to the room there, Barry. All right, nice little rotation there against our 78 area. Again, that's a price action play that some of us like to take. Not everybody likes to take them. You have to know when to take them, when not to take them. We always try to imply to have various reasons to trade when you're putting on a trade, and those reasons obviously we would explain to you in our education course, because that's what we do here. That we don't just trade for the sake of trading. So there are reasons why we would put on a trade and not. Well, I mean, if we're trading between 71 and 78, I would obviously 78 is our pivot, so there was a reason maybe we could have maybe traded the 7, sold the 78 off of that rotation down to the lows. Maybe the first time to it, maybe even the second time to it, but I wouldn't do anything now. And as far as 71, I would not touch that level at all. I would look for the 62 down below our next support level. That's way too risky to try to jab and say that we're gonna. That's a range. We don't usually like to trade in a range game. So the 71 level on the downside definitely I would not be touching that. The 78, at least we have a reason to trade that. It's our pivot. It's also held a few times, but anything above 81, I would probably be out of any shorts if you're going to take it. But so if we're trading at 78, that's right. Now, if it wasn't our pivot, I would probably not be doing anything because I don't like to trade the range game. So when it starts trading in a range like this, I would wait for the breakout and kind of let the market do its thing. If it wants to trade like this 4 or 5 times, just make sure if you want to trade it that you can stay in a tight range and keep your stop in place. And that way you're not going to get hurt in case it breaks out. So, but I tend to stay away from trading ranges when it plays this range game back and forth. The desire to trade is there when you see it go in this range, but again, we need reasons to get in. If you don't have a legit reason, then it's not conducive to your trading when there's not a reason for it to trade. We do look at the market profile a little bit, but market profile in the sense of volume traded at each price versus time. So we adjust the market profile dynamic to volume at prices versus time at prices. That helps because you create value, and the market creates value at a certain range, like somebody suggested here, 71 to 78. So, you break out it. If you think about it, if there's some increased volume between those levels, the volume chart will increase just to like a time factor of market profile, but in volume. And then you can break out of it or not, and you get to a new level. So those do occur. We do look at it. That's we always are looking for where the market creates value. Sometimes it could be done over a period of time, like we were staying in a very tight range, maybe 30 or 40 points for a week. So the market basically created some value there between 30 or 40 points, not so much just 7 points. And so you have to wait for that breakout to be able to take advantage of that too. So, yeah, but there's different concepts and ideas to look at. It's just a matter of understanding them and then knowing when to apply them. And that's what we try to teach here. All right, market, the bond market back on the highs. I mean, that's pretty impressive. I think it's pretty impressive. And we're trading to the lows. How's that? What does that tell you? I don't know what it tells you. It tells you something. I have no idea what, but it tells you something. It's supposed to tell you something. That's for sure. I just don't know what. I'm not smart enough to know. All right, we're coming back down here to the lows. I would, again, 62 is the next support level that we have. Make a new low by a tick. Oh, what is that? This rally. Who knew? Who knew? I wish I could tell you I was going to do that, but I didn't. I didn't know. But it is one of our plays. You have to be kind of stepping out there to take that one. Very risky trade there, but when it works very nicely. All right, coming back up here, got up to the 74 area. Get a little resistance around the 80-ish area. And like I said, anything above 82, you want to be out of any shorts if you're going to short it up there. And above the 82, maybe go and try to look at the, well, we already tested the 84, so that's not a level. But get above 86, then we'd have a run up to 90. And in the middle here, you got to be patient. I know you feel like you have to trade, but picking your spots is more important, and preservation of capital is even more important than that, right? You don't want to just trade for the sake of trading. You want to make sure you trade and find a good opportunity to trade and try to make money off of it instead of just trading this little range here. You'd be guessing here whether it holds on to the range or doesn't. Makes a new low by a tick, it doesn't, right? Very risky trades, but doesn't mean that you don't take them. It all depends on each individual's risk tolerance, and everybody here is a little bit different, and I understand that. So we show you a whole bunch of reasons to trade, and it's up to you as an individual trader to make those decisions as to what trades you want to partake in, which trades you visualize, recognize, and then how you execute them is up to you, right? How you scale in, how you scale out. All of those are different variables that you have to consider when you're trading. Anybody have any questions, or if anybody has any comments, you can put them in the chat box area. If you look at the chat box area, you see the friends and family discount that was just put up. Basically, it's just to make sure that we cover some of our costs that we have here. That's just a nominal fee. The education obviously is obviously a little bit more costly, and we do the education in this venue. You can take advantage of live charts. We do it in the afternoon when things slow down a little bit, and we focus more on the morning hours to give us our opportunities to trade versus the afternoon. The afternoon dynamics of trading totally different than the morning trade. Morning trade, and then once again in the afternoon, there's less traders, less volume. Even though today we're kind of whipping around here a little bit, but the opportunities are a little bit different. So we focus more on the morning hours to give us the chances to trade. Again, if anybody has any questions, please feel free to ask. Put them in the chat box areas. The market kind of range bound here a little bit. You have to wait and be patient and wait for the market to give you the opportunities to trade. Bonds inching up here to the highs. So very impressive there. I keep bringing back the bond market here because of the dynamics that the market was looking at for us to rally or not rally, and all of a sudden bonds are prices are going up in the bond market, which means interest rates are going down. Totally messes with our head here. It's not supposed to happen. It's not what's happening, but that is what's happening. But the market's still going down, so we'll see. All right, market coming back down here. We got the 62 areas, our next support level. Let's see what it wants to do down here. The bonds pushing the highs here. We're getting inverse trade. Is that what's going on? I don't know. See what it wants to do. Bounced off of 63 and change here. Got down to 63.50 and bounced off here a little bit. So again, we have 62. Yeah, Mark. Yeah, as long as the weather, it's really hot today, but we had some rain overnight. Well, big thunderstorms, boomers this morning woke me up. Did I get 63? No, I did not. Did you? Got down to 3.5. Why would I get it and you not? Does the market like me better than you? You would get it if it went down there, and so would I. Yes. Okay. All right, well, we're just kind of rotated very nicely. We had 62, got down to 63.5. That's a little bit of a bummer there, right? I mean, that's so close and yet so far. And look at this rotation off of that 60. Very, very, very nice rotation. Unfortunately, they just kind of missed it by just that much. So obviously, if we rotate back down, might be a little bit riskier trade. Maybe you enter a little different area. Maybe adjust it a little bit. But we were so close to getting in there and just kind of missed out. Nice, Timmy. Tim wasn't scared at 63.70. He got it. Way to go, Tim. Yeah, you. That's all you took 5 points out of it. That's it. I mean, you should have just gone to the bathroom and come back. You would have had a 10. But nice trade anyway. That's where your goals are. So as long as we stay focused, been patient, you were patient and waited. That's what we're trying to do here. You got to pick your spots. You got to be patient. You got to understand, how you get in, how you scale in. Those are all legitimate concerns for everybody here. Nice pop all the way back up here to our 78 area, which is our pivot again. I don't know what it's going to do there. But a nice rotation there off of that quick bounce off of 63 area. All right, if you did maybe saw the pivot rotation area here, maybe you're able to take advantage of that. A nice rotation there. Again, waiting for the opportunities is key, even when it's whipping around. And it goes right back up to our 78 area there. And then that's also our blue band. And nice rotation off of that area. So a nice little opportunity there. Again, patience is important. Even though we missed the 62 down below, you had a little trade back up here against the pivot area. Like I said, it's also was our blue band. And remember, I say area, right? Not exactly right, because we're not always going to be exactly right. We have to trade around a level, scale into it. Just be patient and wait for the opportunity to present itself. So you might have been upset that we missed it by just that much on the downside, but at least we were able to get something back up here in this quick rotation. But Tim's happy. He got 63.75. So again, this is where he made an entry point around the level, right? Again, like I said, not everything's perfect here. We can't go down to 62 and exactly do exactly what we wanted to do, but the level was triggered an area, and that's how he was able to get in. Well, it'll be a good weekend there, Tim. Should be fun. It's always good to make money on Friday, right? Man, look at that bond market rally. That's unbelievable. I am just, what's happening right now, I think it's catching a lot of people short. And this is like, opening the wound and saying, here, you guys want to be short? Here, take that. You still want to be short? Here, take that. You want to get average out and get short above here? Here, take that. That's what the bond market is doing right now. It's like killing all the shorts that thought the interest rates were going to go up, and now they're like, "What is happening? The market's going down. The interest rates should be going up, and we are going the opposite way. What's going on?" They are putting the screws to the shorts in the bond market right now. That's terminology is being nice. Well, the Fed is supposed to screw with every kind of trade. That's what their job is. You know, again, yeah, at the end of the day, oh my God, look what they're doing in the bond market. They're just like, just messing with people in there. Look at that. That is crazy. They are just messing with people in there. What inflation? What rate hike? No, they don't worry about it. Why would they? They don't care. That's why we don't we don't try to assume what they're going to do, say, or we don't trade the Fed here. Let's put it that way. The Fed is a way to F us, and they do it every time. And definitely we don't trade, but we do trade the after effect, which is what we're trading now, which is also is good because look, we're getting nice opportunities to trade in the market today. So it really doesn't matter as long as they give us chances to trade. At least we're getting good opportunities here today to trade. Well, that break was coming off of the bond market. They just screwed everybody and boom it back. Yeah, that was an impressive move right there. Seen that move happen many a time. It's just hard to get short. I mean, it's just hard to get short. But anyway, it is what it is. We don't trade the bonds because, as you can see, it's just a one-way trade. One way going up, one way going down. They just kind of run through levels sometimes. It's totally different trade than it used to be. It used to be a really nice trade, but not anymore. So that's why we stay away from there. We just kind of try to hope that it gives us an opportunity to trade in the equities, because at least the equities trade well technically, at least much better than the S&P. I mean, the bond market. We are slowly drifting back down here. Again, be careful there against the 62 area, only because of the way it just traded before. It's a little bit more tenuous this time around. And again, maybe make an adjustment. All right, patience is important. We did rotate there off of our 78 area there, which is our pivot. And coming back down, look at the bond market now. This is just beautiful there. That is just beautiful. It'll base itself out and then maybe go and retest those highs again. That's what it likes to do. But anyway. But it's kind of just slowly drifting in this bigger range that the market's been at. But again, we're looking at the 62 area, maybe the lower end of that level to get in as a little support. But obviously, like I said, it's a lot more riskier than it was, 15, 20 minutes ago when it got down to 63 and change. And we're slowly floating back down here to the lows. See what it wants to do. Again, just keep your stops in place as we're coming here to the end of the morning session. Trade after this is going to come a little bit slippery if it hasn't been already, as the market participants become less and less. Well, we definitely are scalpers. And they've only heard trades on that consider reversals, but we do have momentum trades too. Those occur when the market sets themselves up. So we haven't, again, earlier I said above the 86 level, we might rally back up to 90-ish area or the levels above. So we have a little momentum trade up there. Again, we kind of let the market set us up for those opportunities. We're not going out there and try to create them. So that's what we are doing here. So we are scalping, like I said, usually 2 to 3 points with the levels plus the price action opportunities. And so that gives us an opportunity to scalp the market. And like I said, it works for us. The levels work well, and the price action opportunities when they're available, we look for them, but we also make sure we keep our stops in place because obviously some of the dynamics of the market can make those price action opportunities go away fast sometimes. So. All right, well, we went down there and got down to 64 now, and then popped back up here. So the 62 is becoming a lot more tenuous than it was even a little bit ago. We wanted it to go down there and hit our level a little faster than that. Unfortunately, now we went to retest the 64 and not come down and retest the new low. So be a little bit careful there around the 62 area. All right, Mark, you too. I thought you would take that trade up there. That was definitely your trade. Blue band and the pivot. Everything kind of came into place for you very nicely there. So enjoy your weekend. I'm glad you did okay there too. For sure. Call me like after 1 Chicago time, which is 11-ish your time. That works for you when you get out of the beach area. not surprised. All right. All right. So again, we seem to be range bound, but we are making lower highs. But if we get above I think we get above 80, definitely don't want to be short anymore. I don't know if we're going to be trading this range, maybe making a lower trade. I don't know. We have the levels, we have our opportunities. Be patient and wait for the market to trigger something. And see what happens when it doesn't work to trade. All right. I mean, that's all we can do. And I did say that the 62 is a little bit more riskier than it was, like I said initially when we got down to 63 and change. So it's a little bit more tenuous this time around. On the upside, again, I think we get above 80. You definitely don't want to be short, and probably if we get above 80, we might have rotation back up to our upper levels. I don't know if that'll happen or not, but at least that's where it seems like we might be watching as a key. The volatility is still in the market. We do always increase volatility when the markets go down. That's why traders like volatility. I mean, traders like, I should say, markets going down, because we get action, we get opportunity, we get trade seems to slowly come back in our favor. Not so much we make money or not, but at least we have trades. Uh, we've been very, very patient this week. Kept telling you to be patient. Let's wait for the opportunity, especially at the beginning of the week when we were waiting for the FOMC to do their thing, and the trade was very, very slow. But at least today we get paid off very nicely here with the after effect of any of this stuff that they are doing. So it's fine with us, right? Don't matter to us. If anybody has any questions, now's the time to ask. We're going to take a little bit of a break now, see what happens this afternoon. We're going to be we'll be around. We'll come back here in a little bit, see if we have to make any adjustments anywhere. All right. Again, we'll get back in a bit.
Hey, Adam, you okay? Hey, Tulio, did you sign up for Saul's Friends and Family? Just let me know back in chat. Hey, Adam, you okay? I sent out a test. I'm not sure if it was a test for chat or audio. Just let me know back in chat. Hey, Tulio, you all set up? Just let me know.